Good afternoon, everyone here, and particularly everyone watching from home. Thanks for spending the last half hour or so with us. We'll make it exciting, so stick around. Yeah, the introductions have been made. I'll give room for more introductions by ourselves in a second. I had quite a few interesting conversations around hydrogen over the last 1.5 days of a very successful conference. One argument was definitely always when we went back to the basics of hydrogen, that hydrogen has actually been invented in what, 18, or I guess the first fuel cell in about 1850s or so. Why is it now that we're actually looking at it more seriously? And obviously that is very much driven by climate concerns or policy. So we'll definitely be looking at that as one of the aspects, but very much obviously here today are investors, so the financial aspect will be one of the major ones. So I think we can establish that today clean hydrogen is well established as a cost-effective and I guess scalable way to really decarbonize several sectors. Amongst others, I guess we can summarize, it serves as a feedstock for the likes of fertilizers and chemicals. It definitely helps reduce carbon and acts as a fuel source for aluminium and steel production. And of course also gives opportunity for fuel for heavy transport sectors. Involving the audience, I'd now be curious, do you think the majority of demand for clean hydrogen in 2050 will largely come from A, feedstock for fertilizers and chemicals, B, fuel for, or source of heating for steel and aluminium, or C, fuel for heavy transport? I'll involve you this once, so you all wake up and are engaged for this session. Who is A? B, for steel and aluminium? C, fuel for heavy transport? Okay, so this is like a 50-50. About half of the clean hydrogen demand in 2050 will be coming from steel and aluminum production, or really heavy industry. And I think that was also in our preparation call something that we definitely all agreed on. So without further ado, I do want to make sure that we introduce ourselves a little bit more and kind of your aspects and your focus areas in this space. There is a lot of bottlenecks that still need to be overcome, but I think that those are the ones that we want to discuss and that you guys invest in. So maybe Lisa, starting with you, obviously UVC Ventures, you guys have invested, I think, in about one, I guess, hydrogen startup, but looking for more. What is your focus area when you look for startups in this space? What do you think are the bottlenecks and AKA opportunities for you guys?
Yeah, sure. Thanks for the introduction, Jill. It's a long question. Let me start with a quick intro on us, UVC Partners. So I wanted to bring the financial investor perspective. UVC Partners, we're an early stage VC fund based out of Munich and Berlin. And we're generalists. We invest in B2B and deep tech. Climate tech is one of the core focus areas right now, given our strong industry background. So kind of our unique advantage is the corporate ecosystem that we have, and also our very close relationship to the Technical University of Munich and the whole innovation ecosystem around there. So we've always invested into deep tech. Around a third of our portfolio is hardware. So within climate, it's actually, we feel like we're one of the few ones who can actually do true climate tech, deep tech. And hydrogen, it's one of our focus area, one of our areas. I wouldn't even say focus areas. I would say it's something that we put a lot of potential to. We have one investment in hydrogen. They're doing turquoise hydrogen using methane pyrolysis. So I actually find this quite interesting. And I started, I looked a little bit into the hydrogen space, and I think in terms of opportunities, it's still, for a financial investor point of view, it's quite difficult to really know because the demand is really uncertain. We don't know yet where the applications are gonna be at. You mentioned these scenarios in 2050, but these are also just some models, and I think that nobody really knows yet, because if you look at the demand today, it's still very uncertain. Regulations are going in the right direction. What I find quite interesting is, there's a lot of attention on green hydrogen right now, but I think green hydrogen will definitely, it's very important, and there's cool new technologies making that more efficient, but it also has lots of bottlenecks in terms of, you always need to have access to cheap renewable energy. But that's not always where the hydrogen is being used. So I actually find quite interesting different ways of producing hydrogen. and all the technologies evolving around that, because in the end, if we really want to be able to tap into the different use cases, we need to produce hydrogen in different ways. So it's not going to be a one-size-fits-all solution, but actually we need kind of a matrix of like, okay, these are the parameters we need, and then this is the best way of how we produce hydrogen. And then, of course, I think the whole ecosystem, like the whole value chain around it, is also interesting, like the conversion, the storage, and all of that. But it really depends also on how the market develops. And for us, like investment horizon is also, we're normal financial investors. We don't have any like strategic objectives. So we also need to see the demand coming. So we need confidence on that side.
Thanks for I guess, summarizing and introducing yourself, as well as pitching the turquoise element of hydrogen, or color of hydrogen amongst the rainbow colors. I thought one of the things that you brought up was definitely, obviously, committed to demand, but also green hydrogen versus other ways of producing. And in our preparation call, you mentioned, Toby, that ultimately you see a lot of electrolyzers coming online. Obviously, they're being demand, but not as much committed demand as I guess a lot of us would hope for. So I'm curious what your view is in terms of, is the demand going to be committed anytime soon? And do we, in the lead up to that, actually, do we need to rely on non-green hydrogen to maybe be a bit more conservative, but give hydrogen, the hydrogen value chain kind of the chance to build up?
Yeah, I think with the demand and supply question is, been going on for the last couple of years. It's a very chicken and egg, like iterative, like question and problem. A little bit of an introduction of myself. Yes, Toby Chan from Audacy Ventures. We're an APAC-based principal investments group in the climate tech sectors. We've made 3 investments in the hydrogen space. About 3 years ago, we invested in a hydrogen sort of fuel cell heavy vehicle trucking company called Horizon Motors. The technology was developed by their parent company called Horizon Fuel Cell Technology, which is soon about to do their own fundraise. It listed on the NASDAQ via SPAC in 2021. Since then, or in between, we also invested in a related company that focuses on fuel cell stacks related to aviation called H3 Dynamics. And then soon after that, we also invested in a company called GenH2, which focuses on liquid hydrogen technologies specifically around an energy efficient way of liquefying it, and also storage with a recirculatory system that is zero loss, which is a big, huge problem for hydrogen. And they just announced a distribution partnership with Chart Industries, actually, where Chart is focused on the really big storage solutions, and we focus on 5 tons per day and below. Actually, our first product is a trailer that only liquefies around 5 to 20 kilograms per day. And our experience across those investments is that, and our friends there also in Ballard, is a lot of the projections that we made a few years ago, yes, the demand's going to be there, and I think it's still there, but how do I buy these vehicles or get these units without actual enough supply of the hydrogen molecule itself, which leads us to actually develop our own, I guess, like a related firm is trying to create that demand by partnering with like renewable energy developers to build smaller scale green hydrogen projects to start with. Those that are not like 4 or 5 years out, we want to get approved for like smaller scale, maybe even like 20 to 100 megawatts in the next couple of years. I think to be true, yeah, like there's no point of using the molecule if it's still, you know, produced from the gray sources. Turquoise is definitely really, really good already, and I think the greener the better. But it's just, I think the sector was also hyped up a little bit too much, and people just need to realize that execution just takes time and roll out. And I think in places that, especially the ROA, you know, the policy support is really sort of helping to accelerate that. But there's time's running out. There's not enough of it. Yeah.
Thanks so much. I mean, you just brought policy back into it. The BloombergNEF research team definitely sees quite a bit of development in terms of other countries, of course, now chasing the funding that the US has introduced with the IIA. And I think what I said at the very beginning, it's interesting that this is one of a few technologies that wouldn't necessarily go ahead in the free market if it wasn't for the climate consideration, aka policy. So we're now talking about huge amounts of money invested in it, as well as a lot of innovation, but really driven by enormous and rapid policy setting, which I think is quite unique in that sense. And Toby, one thing that you also mentioned was collaboration with corporates, or I guess needing to, of course, secure offtake agreements, for example, or any which way that can secure and make it more investable/bankable. So Kai, I'm going to bring you into this because of representing the Baker Hughes, but also particularly the New Frontier team within. I think quite interesting because when we had the introduction call and prep call for this, you of course gave a bit more background on where you guys actually come from, which is really, I guess, the traditional oil and gas sector, which is, I mean, that's the sector that really has the know-how of building such an industry that is not really necessarily technology industry as such, but really more of a resource industry that probably hydrogen can and will develop into at some point. So very curious to hear a little bit more about your background in terms of, if you don't mind making an introduction yourself as well, but also your view on what types of partnerships are needed, and how do you, from your experience and some investments that you've made, how do you partner with earlier stage investors, and what is your play or maybe also strategic focus in that place?
Okay.
Very long question again, sorry.
Yeah. Maybe to start with, Baker Hughes is an energy technology company. So we've been historically serving a lot of the oil and gas clients, classical Shell, BP, Equinor, and the likes. And we also had a strategic realignment, as many of the companies in that space, where we really want to focus on and be the technology enabler of the energy transition. And for that, of course, we do many organic activities, but also for then the inorganic activities, we created this early stage investment team called New Frontiers, where exactly we focus on investing on very industrial, heavy tech companies in the space of hydrogen, CCUS, geothermal, but also more explorative areas like the nuclear industry, using waste streams as an energy resource, for example. And focus there. Actually built a portfolio, I think, of around about 11 companies over the last 2 years that we are, of course, now trying to nurture and bring to the market. And I think this also brings me to the point of why it is potentially relevant to what the advantage would be always of bringing such a strategic into a fundraising round for a startup. And I think it's really around, we as a technology company, we can help to de-risk the go-to-market from the technology development roadmap. Oftentimes, there are very good scientists behind that are able to reproduce those some of the breakthroughs in a lab environment, but bringing from a lab into like a big plant, this is quite challenging and requires, of course, the ability to handle EPC companies, but then also to work with potential off-takers and customers, and those are our current off-takers. And for example, with some of our portfolio companies, one thing that we do is we set up a vision together with a customer in the oil and gas industry, for example, Turkish Hydrogen. Again, we also have 2 technologies actually in that space, or investments in that space. And we are kind of the middleman in between, because the startup is unable to handle the long response times and the sluggishness of usually the big corporates and ourselves. We know how those processes work with those customers, so we go in between and we kind of buy off the equipment then off those startups and sell this then directly to the customers where we are approved suppliers already, because often even like just the approval process of suppliers is quite a tedious one that oftentimes just really kills startups because it takes 12 months time, and within 12 months time, oftentimes startups just run out of cash. So that also brings me to the point of more partnerships. What we really like to do in our investments is to collaborate with users. So because we see Baker Hughes usually always as a company that helps to de-risk the technology part. We have the commercial context of being a multiplier, but in the end, we still would like to have some sort of a committed off-taker, and that's what we often see if we work with Saudi Aramco, for example, then directly to you have the technology de-risk, but you have also the customer for the first of a kind, second of a kind, third of a kind, because that is oftentimes actually a big gap that is really hard to fill, this first customer gap. And I think that's where I think more partnerships should play, so that at least once you go to our Series B, Series C, and you have actually 2 or 3 units running, there's much more confidence and also for follow-on capital.
How can that gap, I guess, be filled ultimately with more than just a few players in the market? Because we were talking a little bit about the funding gap, and I guess a tech company moving into maybe, rather than just a tech focus, really into maybe a rollout phase, for example, a rollout funded phase, more of a, I guess, really CapEx almost vehicle. How can that be done with the likes of, I guess, not only CVC players, but ultimately the large corporate strategy players being involved here?
Sorry, just to clarify, you're asking if we can separate that CapEx from
the
OpEx part?
Yeah, and how large players can get involved in that? As in, could that be a play for yourselves?
I would say that on the CapEx part, that is certainly where we as Baker Hughes can help to improve the economics by finding the right equipment, for example. If we really want to go into operations, but this is actually really not the competence of ourselves, and that is where exactly we see other companies who have the ability to roll out these technologies as they are the users could play the role of actually taking this part. And that's where what I exactly mentioned. If you co-invest, for example, with a party that carries that OpEx together with a party that is able to not only carry the CapEx, but is actually able to reduce it due to its technology abilities, that is where I think that would be a pathway that could work.
Thank you. I think there's more of them that just we need to involve, I guess, more of the big players ultimately being committed. I guess that's where it comes down to. One more question for you, maybe partnerships. Of course, a little bit also from your experience in the different, maybe aviation, maybe the trucking, maybe I guess the liquid storage aspect. What types of partnerships have you seen with larger corporates in your 3 investments that you've made?
Yeah, I think as Kai mentioned, we'd love to partner with those. At the end of the day, we're a financial investor, right? Even though we have access to sort of scientific experts ourselves, but that's not our DNA. So partnering with firms like Baker Hughes, and in those investments that I mentioned, the trucking one, the lead investor was Total, and there was a Korea Zinc in there as well. So players like Fortescue in Australia that turn in from a traditional sort of a coal company that are viewing hydrogen as a resource. They themselves have their own ecosystem of also, there are end users, well, they have like many mining trucks that could be using sort of hydrogen as a fuel source to power their own operations. And I think also the partnerships between early stage and later stage investors, like my old firm, Macquarie, or even a lot of ex-colleagues that have left to Stonepeak, like they only come in once the project is de-risked to a certain level. But if we know that they're going to be there and we can take that earlier risk, we know what the variabilities are, we know what the investment requirements is, then we can calculate what is, if I get through this stage, then who's going to hold on to and grow the baby from this point onwards. And also think like cross-regional partnerships are very important. Like in Australia, in the oil and gas days, there's a lot of off-takers from Japan and Korea that would take major stakes in offshore because they want the off-take, right? So I think this is something that is needed or I'd like to see happening in developing like the hydrogen sort of projects and the supply side of things.
And
Thanks.
If I may build on this point, actually, I think that's actually one thing that we really, really look for, those kind of partnerships where Baker Hughes, as an industrial company, goes very deep into trying to understand the technology and how it works. And oftentimes, if you work with a pre-seed seed company, companies just don't know yet. And that's a thing that large investors like ourselves, we don't have the risk appetite behind that to actually work with companies like that. And hence, I think it's super important that we have strong links to people like that are investing in pre-seed and seed, for example, that could deliver the deal flow. And if you know how those teams work and what their struggles are, and have an honest conversation around this actually makes, I think, a big difference in just handing on from conceptual stage into actually a phase of industrializing those technologies.
Yeah, and also I forgot to mention another area of partnerships along the, I guess, the full cycle, like from the, say we talk about green hydrogen, like the electrolyzers, that's part of it, and then to the usage, and then to like the storage like solutions, like whether it's like metal hydride or in liquid, or I've even come across like in silicon powder, like how do we pair that then with like the logistics part of it, like once to get to that whole chain needs to talk together. So it can get from being generated to actually being used in a more seamless sort of fashion, yeah.
I think the true bottleneck really is the demand side. And I feel like if demand is so uncertain right now, but if the demand is there, then it's gonna spur everything. So even, like building first of a kind plants, like you see it in the chemical recycling sector, for example. There's many, chemical recycling still doesn't work perfectly, but there are a few companies which are now going to like first larger scale. And what you see there is they're all partnering with corporates, and these corporates are investing together, doing joint ventures to secure that supply. And I think that is going to mirror in the hydrogen field as well. Once there are companies actually committing and wanting to buy, and then they need to do this because they have no other option. But I definitely think that like free market dynamics might not be enough here. So I think especially in this field, like policy is so important, and maybe grants, like in the US, I think they are quite good with these grants, giving these out, really like feeding the appetite of this. But also, I don't know, like other financing options. So it's not only like equity, but also think about debt, or think about some sort of like, other ways to secure these assets.
Yeah, I think that was going to be my next question. So I think what we can summarize a little bit in terms of bottlenecks, demand is always commitment of demand. Or, I guess, you were talking a little bit, Toby, about supply chains overall, so that it's not just focused on one area of, I guess, supply chains and going into the value chain of hydrogen, I guess, overall. So that it's not just one area of the value chain, but that all of it is basically, supported and innovated. And I think my next question was going to be around financing in terms of when does this go from a VC tech play to asset play, as an asset rollout, and how is that going to work ultimately? How do you see it work in terms of just maybe focusing on your startups, but also others that you see in the market? What's next for them? How can they grow, assuming the demand comes?
I think
from a financing or an investing perspective.
Yeah, I think it is coming, but because there's quite a lead time from projects being sort of conceptualized to actually getting through the different sort of development approvals and to get to FID. What I've seen is quite a few of these are still in the development stage and maybe 1 or 2 years out, but I have talked to a developer that says, oh, actually the FID is like this year and they're going to come online like next year. So I think, yeah, like it's definitely coming, but I think just our expectation before was like maybe a little bit, there was a bit of overpromise.
But how are you planning to basically help advise, guide the startups that you invested in to really becoming big over the next 10 or so years? As in, how do they go from being tech companies now to really being, I guess, ultimately asset holders or asset, I guess, developers? How do you think you envision working with the finance sector? You were talking about debt, for example. How do you envision, I guess, guiding them to that, to having that asset or those types of, I guess, fundings available in the space? So who do you partner with in that regard?
Yeah, I think like once those companies, they say, for example, if I'm making a heavy vehicle, like they need to get the first we've seen it in other investments that we've made. Maybe firstly is they can be more financeable by private debt that has a higher cost of capital. And once that it goes over, say, the minimum threshold of what a larger bank would see, then that cost of capital would come down. And they've seen that the companies, their traction is this, and then they can get to maybe, from in the next year, they can do 20 to 100 million. So it's really unlocking that first 10, 20 million that is too small for a bank to spend resources to look at. And yes, we have sort of family offices that have taken sort of that bridging sort of capital gap. And I think, we are in the process of raising a climate to equity fund, but there's also demand for that private sort of capital in between to get it to sort of the larger financing rounds as the company grows. Yeah.
I think it's really dependent on, the thing that we as investors need to ensure that our portfolio companies manage to lock in offtake agreements. I think these are the key for securing or to moving away from equity type of financings to debt financings. I think this should be our core goal as portfolio managers in the end then, and helping them on the board with connecting to the right off-takers. And I think, as you mentioned, that the demand side is a little bit the problem. I guess we should try to focus on where there's currently an hydrogen demand. And as you mentioned, it's, of course, chemical industry, currently a lot in ammonia, for example, but then also can we help with other investments, for example, to foster the adoption within the steel industry, within glass, within other, where you start to decarbonize industrial heat, for example. And I think that if we start to think about it more holistically, then we're also helping the entire supply ecosystem then to achieve those off-taking agreements and of course secure then more conventional types of funding.
As a VC fund, but obviously very connected with academia, how is there anything that you, I guess, do push, educate for on the demand side, amongst other steel, aluminium, chemical, fertilizer sectors?
Yeah.
Any role that you see yourself playing there?
So I think in this space, it's I think it's actually quite difficult as a startup to secure that offtake, to win that big customer who's going to be like, here's my big offtake agreement, because in the end, yes, they're going to evaluate different technologies. But they would probably go for the player who's more has a better reputation. So I actually think in this space, it's even more important to have these partnerships, basically get the proof that there's a bigger person, bigger institution behind it, in order to really be able to play this game as a startup. But I mean, you do see some successful hydrogen startups like Sunfire. I think they're doing a great job. So you do see some successful examples.
Thanks for that. I think also ultimately what we said, the point of policy was being driven, but of course, I think on the demand side, it's very much a push of policy rather than a pull through, I guess, educating of doing the green thing. It's really policy, carbon markets, carbon pricing that push the demand side to, I guess, ultimately rise and be able to and willing to commit, I guess to that extent. I do find it interesting though, because that is a very common thread, right? In any industry that is starting to develop, when are people willing to buy and in big quantities and committed and over the long term so that we can ultimately do something. So I think one thing that one can do is actually working with the demand side directly, even if it is a smaller, I guess, groups of us that are very innovative. And I think partnerships are in this space, as we all kind of, agree to, very essential. So I think this summit today, for example, and yesterday was one where a lot of people connected from a lot of CVCs in the place, a lot of course, investors, but also early startups to secure, into the future where we can work together. But with 40 seconds left, Rod, I would like to ask each of you to just take make one call in terms of where do you see the biggest opportunity along the value chain in terms of investments? So when you scan startups, what is it? I mean, we've heard some storage, we've heard some different ways of production. Maybe starting with you, Toby?
Actually, I don't have a definitive answer because I previously thought fuel cells, the room for improvement because it's been around for sort of, but earlier I met a startup that says they could do something very revolutionary, like with that, just the like different ways of stacking it up. So before I'd say like definitely on the storage and logistics side of things, because that we see as a bottleneck, but now after meeting companies here, I'd say it's all the different types of innovations that is happening or at different stages of the value chain. So I'm pretty excited to see how these...
So the Energy Tech Summit has changed your view?
Yes.
That's great.
Yes.
Kai?
I think it's a little bit around platform technologies that apply across, I think, different hydrogen production technologies for green, or for electrolyzers, being, for example, I think 40% of a green hydrogen production system is usually only the stack. The rest of it is really the balance of plant. And if you can improve the balance of plant, for example, by silicon carbide, solid state, power electronics, I think that's where you can reduce OPEX a lot across all different kind of systems that are currently being trialed. So I think that might be a really interesting area to look into.
Thanks. Lisa?
Yeah. What I find quite interesting is companies managing to tackle some sort of new feedstock that cannot be, isn't being used right now, to turn that into something valuable. So for example, hydrogen. I also talked to one company doing this today here, and I thought that was quite cool. So basically enabling a more decentralized production of hydrogen that also solves lots of problems with transportation. So that. And another field that we haven't really touched upon today is all these new potential use cases once we have lowered the cost of hydrogen. We also talked about this a little bit in our pre-call, alternative proteins, for instance, chemicals, materials, all of this. So basically, if we manage to drive the cost of hydrogen down, then there's a whole new realm of possibilities that we can do. And the interesting part is there are so many startups that I talk to, and they always have this hydrogen as part of their equation, and then they always put in their financial models, put down an assumption for the cost of hydrogen, and they're yeah, for sure it's going to be there. But if I now also gaining so many insights from the summer, I'm actually not so sure. And I mean, yes, it will happen, but we still need to do a lot for that to realize.
Yeah. Thanks for that. So it's basically quite general production and branching out, to summarize it. Thank you very much for sharing your views, and particularly for investing in this space, for partnering, and I guess establishing more partnerships throughout summits like this and others as well. Thanks for being my panelist, and thank you, audience, for sticking around. Thank you.